afternoon and good evening, good morning, wherever you are in the world, and welcome to this session on the future of crypto markets to give you a perspective on DeFi, NFTs, alternative investments, tokenization of assets, all the major trends we can see on the crypto markets. I'm Emmanuel Pessenisic. I'm the co-chair of the blockchain committee of the FinTech Association of Hong Kong and head of digital strategy at BNP Paribas Asset Management. Today with me, I have an awesome panel, and I will basically introduce them, each of them quickly, and then I will let them, deep dive on what they are doing in their daily job. So with me, I'm super happy to have Malik and Kotadia, co-founder and global board chairman of the Global Impact FinTech Forum. Benji Rameau, founder of Genie Metaverse DAO. Lucy Gazmararian, founder and managing partner of Tokenization Capital. Prakash, Somosundram, CEO and co-founder of Enjinstarter. So before we start this amazing panel, maybe we will, just each of you, introduce what you are doing a bit into more detail. So Malik, let's start with you.
Thank you, Emma. Hi, everyone. Good morning, good afternoon, good evening, wherever you may be logging in from. I'm really delighted and excited to be on this panel with some amazing global experts. So my name is Malik, and I wear various hats in the fintech and blockchain space. I'm the co-founder and chairman of Innovation Labs, which is a global digital transformation and digital finance consulting company. We work with progressive banks, regulators, policymakers, as well as with Fortune 500 clients on their digitization initiatives and digitization journey, all aspects of innovation. On the nonprofit side, I'm also the co-founder and chairman of the Global Impact FinTech, or the GIFT Forum, which is one of the largest, most diverse and most inclusive FinTech think tanks and forums globally. We are now happy to have members from 65 countries, very high caliber members, CEOs of banks, digital heads, regulators, central bankers, folks from various multilateral agencies, etc., as well as academics. And finally, I also wear the hat of an academic and an educator. So I teach FinTech at various universities in Asia, Europe, and Africa, including the core university where I teach. Basically, I am the adjunct faculty for FinTech at the Asian Institute of Management, which is one of the leading B schools in ASEAN and the top B school in the Philippines. Thank you.
Thank you, Malik. Let's go for Lucy.
Great. I thought we were going to go clockwise. Hi, everyone. My name is Lucy Gazmararian. I am the founder and managing partner of Tokenization Capital. Tokenization Capital is an early stage digital assets and blockchain venture fund based in Hong Kong. We started this year, so deploying capital in the extremely fast-moving digital assets universe. I also am on the board of the FinTech Association of Hong Kong. I was formerly Emma's blockchain committee co-chair, and I also started Women in Crypto here in Hong Kong. Great, and thrilled to be here.
Thank you, Lucy. Benji?
Hey, nice to meet you guys. I'm Benjamin Rameau. I am the founder of Genie DAO. Genie DAO is the first DAO which aims to buy NFTs and fractionalize them. Fractionalization of NFTs for DAOs is very exciting because we've had many DAOs in the past which have gone out and bought NFTs. But what you really want is to give people ownership rights over the NFTs in the vaults. And fractionalizing them and creating governance rules around that makes it possible to both to acquire the NFTs and to get your fair share when the NFTs are disposed of. I'm also on the fund side, chairman of Start Art Gallery, which is the first bricks and mortar NFT gallery, definitely in Hong Kong, possibly in Asia, and at least one of the first in the world. And I'm also co-founder of Exotic Markets, which is bringing private banking to blockchain.
Awesome. And Prakash?
Hi, my name is Prakash. I'm based here in Singapore. I'm the founder of Enjinstarter. We're a launchpad focus on blockchain gaming and metaverses. So our vision and mission is to identify the next big thing in blockchain gaming, provide them with all the necessary support to ensure that they become a success. And yeah, that's primarily what I do.
Thank you. So crypto markets are now standing at more than $2 trillion of assets. DeFi, NFT are coming and, are helping, to grow healthily the market with more use case, products, services coming up. We can only expect this market cap to go, to go up, and especially even, if there is further asset tokenization and capital markets asset tokenization, basically. So in order to divide this panel discussion, we worked all together to define, some, major trends we could see, and we're going to deep dive in, in some of those. So the first one we saw is, of course, NFTs. So NFTs, 2020 was the year of DeFi. This year is definitely the year of NFT. We see a lot of new services like, the one that you have built, Prakash, or even, what you're doing, Benji and Lucy, you've been an amazing investor of this space. So maybe you can comment, how do you see the NFT space going forward? Do you see the NFT user being the same type of user as the crypto or the DeFi user? How do you see that evolving? Maybe to start with, Lucy?
Great. Yeah. So NFTs, I think NFTs definitely has come into mainstream consciousness in 2021, but actually the most popular projects that are exploding in value at the moment, which is the crypto punks or crypto kitties, actually date back to 2017. So I think actually what we're experiencing now is, rather than NFTs as an innovation, it's really NFTs taken to the next level, because the smart contract behind NFTs, all the infrastructure, the NFT platforms, the accessibility to NFTs is really showing us what the full potential of this technology will offer. And when I say that, I mean that NFTs, like money, so Bitcoin or like any other digital assets, are programmable. And it's the programmable side of NFTs that I think is really experiencing a huge rush this year, particularly. So for example, with NFTs, not only are content creators able to directly monetize their art or their book or their, anything they want with their fans, but they can also create a financial contract, if you like, so that every time in perpetuity that NFT changes hands, they can take a cut of future sales. So, a royalty agreement can now be built into the smart contract. And I think the realization of that opportunity for content creators is what we're really seeing explode this year. So I would say it's gone beyond the sort of innovative and creative side to NFTs as a business and empowering the individual to create their own business. Cut out gallery owners, cut out the music labels, and it's really going to lead to a paradigm shift in the way that we all organize ourselves and transfer value around the world. So the price is high, but I think if you look underneath the hype, the extraordinary potential of the technology is really just getting started this year.
Thank you. And Malik, since your network is pretty global, is it something you're seeing as well globally, or it's mostly, coming from the Asian investor? How you do see that, the NFT, momentum?
Thank you, Emma. And I totally agree with Lucy that, for one, this is not a new thing. For many of us who've been in this space for a while, I remember having shared the stage, and in fact at the post or during the lunch for the speakers, I was sitting next to the CryptoKitties founders a few years back. So this is not new, but it's entered mainstream consciousness. And I think, like any other emerging technology, we go through the entire life stage cycle and hype cycle. I think it's a combination of the infrastructure with the hype cycle coming together and the monetization coming into the mainstream. Plus, we have to see it in the larger, I guess, social context, if I may bring in that element as well. We've seen this year, that entire continuation of the rebellion against mainstream finance, especially among the millennials. And we saw what is happening with Wall Street bets and GameStop, etc., or AMC. So this is not, in my view, something which is a unique or an isolated phenomenon. It's a part of a larger trend where the same segment of the younger population is saying, hey, why do institutions or why do central banks have to control everything? Is there another way to do things? And I see this as a continuation of that. The enabling variables, I think Lucy has articulated quite well. What I do see is definitely Asia is leading in this, coming from a global standpoint. But like within our gift forum, we have a professor from Georgia State University. She's actually, her entire course is structured around the metaverse, etc. So it's not just Asia. We are seeing it in places like the US as well, which I am frankly personally quite surprised. Given that in many other areas they are significantly lagging behind China or Asia on digital payments and other parts of the digital finance ecosystem. And I do want to share one specific case. I won't go into details because we don't have much time, but it's interesting, and I happened to see it firsthand. In fact, I had invited one of them to speak as a guest speaker in one of my classes to my students as well. There is this company called, or rather this game called Axie Infinity. Along with CryptoKitties, it has exploded and it's in the Philippines. I know the founders. What is fascinating is the social angle of it. So the fact that Axie Infinity came about and really took off in the last 1 odd year, which coincided with the lockdown. So if you see this combination of people stuck at home, having too much time, not having money, not having a source of income, and at least in the developing markets context like the Philippines, etc., one of the reasons why Axie has exploded is not just that there's a bunch of millennials or teenagers who are just into gaming. People actually saw this as possibly an alternative source of livelihood, and there have been stories and enough news articles on some how this has become. It hasn't necessarily replaced their entire income, but it has been a lifesaver for many people in the provinces, in the Philippines, etc., which really to me came as both a revelation and also something fascinating. And in fact, we were talking about coining a term like, if you may be familiar, in many countries where inbound remittances are big, like India and China and Mexico and the Philippines. In the Philippines, there's a term called OFW, Overseas Filipino Workers, who send the dollars back to their families, etc. Now a new term is emerging, Metaverse Filipino Workers, which again is fascinating. And the last thing to talk about it, because I work very closely with various central banks, including the Central Bank of the Philippines, BSP, I saw that the BSP itself is now looking at something like Axie Infinity and whether it should have a payment services operator license, etc., which to me was again another, both a validator of this becoming mainstream. If the central bank looks at you, whether favorably or unfavorably is a different matter, means they take you as a serious player or a phenomenon to look at. So if you combine all these elements between what Lucy has said and what I have seen personally from a maybe a socio-cultural phenomenon and aspect as well, we are definitely now going towards the mainstream. There's still a long way, and I'm sure we'll discuss it. There are other experts as well on the regulatory side, on the legal aspects, etc., and mass adoption. But this is something which is becoming a global phenomenon, not equally with Asia leading, but it's certainly finding a resonance both in the developed and the developing world.
Thank you. That's interesting. So Benji, before the meeting, you were telling me that, opening art gallery, for NFTs, bring new type of people, into the ecosystem. Can you tell us a bit more about that?
Sure. So you usually go to a crypto meetup and you know everybody in the room. Here for the opening of my own gallery, I didn't recognize 80% of the people in the room. And NFTs have really brought a new opportunity to the crypto space because it brings, all of a sudden, you have a huge amount of diversity, which you didn't have before. I think in the past, we had lots of male geeks in their 20s. And all of a sudden, you have a lot of very creative people. You have artists coming in. You've got musicians. You've got a whole new class of potential crypto users, which is onboarding thanks to NFTs. And this is very exciting. For the art gallery itself, Hong Kong probably has some of the biggest private collections of art in the world. And within the art world, NFTs is the hottest thing. And all of a sudden, you find people from a different generation, which didn't typically interact with crypto, which is onboarding in a place which is safe with some curation, where people can pay with a credit card. And I think what you're going to find is that NFTs are going to become the #1 onboarding mechanism for new users to join blockchain. The NFT space itself, I think, is going to explode. Malik, you mentioned Axie Infinity. I mean, this is not just the biggest blockchain game. It's the biggest revenue-generating game, period, in the world, making $1 billion a month. And Axie Infinity proved that blockchain gaming worked. And anytime somebody proves the model works, you get hundreds of thousands of copycats. So right now we're like in 2009 for when the Apple Store just came out. And you're going to get a huge influx of new developers, new interests, new gamers coming into the space. And this is going to power really exponential growth in the NFT space. I've got a little bit of a controversial view on CryptoPunks, but I believe that it's better money than Bitcoin. Because, if you think of the American dollar, it has a lot of value because the USA is a very powerful country, and the tax collector has a longer reaching arm than any other tax collector in the world. And that tax collector, IRS, only wants to be paid in US dollars and no other currency. And so they've built a huge amount of utility in their currency. If you think of Bitcoin, it's not backed by a powerful country, but it's backed by a very abstract concept, which is store of energy. But most people cannot really relate to the IRS or to store of energy. They need to simplify things, which is why coins have always had pictures of Roman emperors. American dollar bills have dead presidents. European euros have dead poets and writers. But you always need to simplify things in order to get mass adoption for your currency. And CryptoPunks is exactly that. It removes all the abstraction away from proof of work argument for all the things that are really backing the value behind a CryptoPunk. And for that reason, I think CryptoPunks will reach $1 million floor price. But there is one thing missing. I think we're still missing NFT infrastructure. To get NFT infrastructure right, it's like shifting from 2017 crypto to 2021 crypto. And in between the two, what we had was DeFi. So 2017, people were very happy to buy crypto when prices are going up. And then they were talking about it a lot less when prices went down 2018, 2019. Right now, people are very excited to show off their profile pictures with their NFT avatars when prices are going up. I can guarantee you that if prices go down 99%, you'll get a lot fewer profile pictures. But what happened in 2018, 2019 was that DeFi infrastructure was built. And all of a sudden, it became possible to stake, to lend, borrow, rehypothecate, yield aggregate, which means that nowadays you've got billions of dollars which are locked in the system and are not moving. Even in the bear market that we saw back in May, the market crashed, but the amount of total value locked in the system actually did not move very much. And we need the same thing for NFTs in order for this rally to be sustainable. And my view is that all of NFT infrastructure will be based on one pillar, which is fractionalization. And once you create fractions of CryptoPunks, then lending, rehypothecating, everything that we love doing in degenerate type of DeFi world will be possible with NFTs. And then it will be possible for CryptoPunks to go to $1 million.
Interesting. Would you agree with this infrastructure, being, not there yet for NFT, Prakash, since you are in the field?
Definitely. I think we're very, very early in this journey. While the technology has been around for a long time, but now that we're going through mass adoption and we're experiencing all the scaling issues, right? Gas fees are just extraordinary at this point of time, and I think that's going to limit the adoption, and I think that's one key thing that needs to be solved. But like what Malik and Benji have talked about, it's actually going to be leading us into a new future, right? I think this extended lockdown that we are experiencing globally, it's going to cause us to be spending a lot more time in the metaverse. And a lot of things that Benji is talking about is actually going to be creating our identity in the metaverse, right? A lot of these profile picture NFT projects is what is going to define us in the metaverse. In the past, crypto affluence may flex with Lambos or Rolexes, but now the flex is via a JPEG, right? And it brings you into a new subculture, and by participating in some of these communities, I'm starting to see that there's a lot of co-creation that's starting to happen. You feel a part of this ownership, and through this co-creation, a whole lot of creativity will come about, a lot more problem solving will come about, and this will kind of bring us into this journey of the metaverse. And again, the NFT plays a key role in the NFT that we envision, where you will be decentralized, where the creator will actually own a piece of the action. And that, to me, is when Web 3.0 is going to be successful. And definitely NFT and crypto will play a key role in that. But we are extremely early in that, and that's my key excitement, being in the space and learning from some of the lessons that we saw from Web 1.0 and Web 2.0. Now we can actually step in with a lot more creativity and be cognizant of where things are going and be able to adapt to some of these opportunities.
Yeah. And so, thank you. The second trend that we see is the emergence of more proof of stake protocols. So I think, Benji started to talk about that. Is it the end of Bitcoin, And, thanks to that, and, 2 weeks ago, we had, Cardano coming with enablement of smart contracts. So how do you see, the crypto world evolving around more proof of stake and coming at cheaper way? Benji, do you want to bring your perspective on that?
Sure. Jenny DAO is built on a platform called Uniquely, and Uniquely has very expensive gas fees and is looking for ways to work around that. So working on Polygon, for example, for layer 2. There have been other chains which have put a lot of effort into NFTs recently. I think Tezos is very aggressive right now. Solana is exciting in pretty much every aspect it works on, including NFTs. But for some reason, Ethereum is still really dominant in the NFT space. And people complain about gas fees all the time, but there are lots of other alternatives, and people still use Ethereum mainly for most transactions and are happy to pay $40 in gas fees. I cannot explain why that is, and I don't know if it's going to last forever. But for the time being, Ethereum is still the king.
Thank you. Malik, do you have some perspective on that?
Sure. I agree with Benji, and I just want to bring in, some broader perspectives. And as I always keep saying at conferences or even to my students, the best way when you're really faced with some very, very, leading edge kind of innovations, and the best way is to try and see lessons from history and where we were in the mid 90s when the World Wide Web was just evolving, Web 1.0 and then Web 2.0 after the crash. So I think one of the things I agree with Prakash and Benji is that usually crashes are the best time to build the infrastructure, keep your head down. And we saw even a player like Coinbase do just that and talk about it, that, you have to go beyond the hype cycles. When the chips are down is when you put your head down, build the infrastructure, plan for the next 10 years. And Amara's law says that, right? We always tend to overestimate the impact of technology in the short term, but we underestimate it in the long term. So we are always seeing the next 6 or 12 months rather than the next decade. And that's how we should look at it. As far as this debate of Bitcoin versus digital asset tokens or NFTs is concerned, my own view is it does not need to be, or it won't be either or. And we have, again, to look at the lessons of history and why Web 2.0 and the platform economy really took off, and why the Facebooks and the Twitters and the Airbnbs of the world became so big. It's as simple as that, the network effect, right? I guess a very simple answer to Benji's perplexity on why Ethereum is so big is the network effect. The more people come onto that, the more the exit barriers are high. And perhaps Cardano and others have better technology, but till the time we reach that critical mass and the network effect, there will always be that advantage with established players like Ethereum. And I think that's the same advantage that Bitcoin also enjoys. Many of us here have been at many blockchain conferences, spoken at many of these conferences, and we can't forget that there is a large community of maximalists, almost cultish, followers of Bitcoin for a very simple original premise that it allows you privacy and it is not controlled by any single government or central bank. Now, of course, we know that over a period of time, that entire premise of people's money has completely diluted or vanished. It's become digital gold. I don't think anybody's even arguing it's not a payment platform anymore. It's a digital equivalent to a gold or any other asset class. But the fact that it is still under your control and perhaps no single government or no single central bank or even an IMF can control it beyond a point does have a large network effect. And again, we may say that it has very little utility. I agree with Benji that it is at times too ethereal, and pardon the pun, it was not meant to be any pun on Ethereum, but it is ethereal. It does not have that simplicity of owning something tangible like what digital assets will give you. But the fact of the matter is there is a bunch of people who say, what I get in this, what I own is my own choice and privacy. So like the US dollar coexists with the euro and other and the Japanese yen, and that's how I see it happening for both Bitcoin as well as digital assets. And perhaps for some more time, Ethereum will enjoy the network effect. And this is what I've shared with some of the founders of some of these platforms as well, that there is too much focus, I think, even now, which is logical. Any new technology, the first 10 years we are too focused on the platform and the architecture and the technology layer, less on the network effect in the app layer. But perhaps this is a logical evolution. Once more apps continue to be built on other platforms and once a network effect comes into play, perhaps we'll see the coexistence of not just Bitcoin and Ethereum, but other platforms as well with their own network effect.
Thank you, Malik, definitely. So then the third trend we are seeing, and I think this is among all type of crypto assets, is of course regulation. We have seen Binance have to, shut down some of their services in the UK, in Singapore. So, Lucy, I think in the way you invest, regulation might be a huge component, when you invest in those crypto startups. Can you tell us a bit more how you see that evolving in the coming months, years to go?
Yeah, I mean, I think those of us that have been in this space for quite a few years, regulation and sort of working with them and working around regulation and trying to find the best way forward. A lot of these crypto businesses, given the lack of regulation, have to self-regulate and get advice as to what would be the best approach. So for those of us that have been in this space, this is a perennial, I wouldn't say problem, but it's a perennial feature of the growth of this space and this ecosystem. I'll say for the regulators, I think it's incredibly difficult. The regulators that we have today and the regulatory framework is based on jurisdiction, so physical territory. It's based on having a centralized entity or a specific person that you can hold accountable. And it's also based on being able to enforce the law, so enforceability. Now, in each of those three areas, when it comes to this explosion of crypto and these decentralized networks, the regulators can't do one single one of those things, right? There are no geographical boundaries in crypto. There's no single person that is accountable. Smart contract code, all these protocols is a result of contributions from all the ecosystem participants. On top of that, DeFi has this composability that everyone talks about, which means that you can have a protocol that at its base has used a protocol 3 layers down or is inspired by some sort of open source code. So it's a whole sort of matrix, if you like, where you cannot find someone that you're going to throw in jail. And then finally, enforceability. How are you going to enforce this? It's incredibly difficult. So it takes the power away from the regulators. If essentially you say, fine, somebody's broken the law, but who is going to go to jail for it? So in all fairness to the regulators, it's an incredible difficult landscape to navigate. And my biggest takeaway would be that the regulators need to disrupt themselves. It's time for regulation to be disrupted, and it's most likely going to start being demonstrated in smart contract audits and understanding that the power of the technology to self-regulate itself through code is way more efficient than a team of 20 people sitting in the Fed that actually don't even really understand what's happening. So what we're going through right now is this very uncomfortable rubbing against each other of how this is going to play out. And Coinbase, the recent, headlines on this is quite extraordinary, because here we have a crypto player that's trying to do the right thing, entering into dialogue with the regulator, trying to share knowledge, because this technology is moving at such a fast pace that anybody in the space can't even keep up with it. But we know it's a better way of doing things. We know it's a more secure way of doing things, faster way of doing things. And most importantly, it's a fairer way of doing things. And the regulators are turning around and saying, you can't do it. It's a no-go. So that's going to create an incredible ripple effect, I think. So I'm really sort of sitting on the edge of my chair to see what this triggers in the crypto ecosystem, because I would say the regulators are outnumbered by this sea change in the way that we're going to conduct our social and financial lives. So, it's always been a feature. I think it's heating up. And, here's to more technology teams in the regulatory bodies.
Yeah, so Prakash, do you want to go to the regulator? No, I'm kidding.
No, I think building on what Lucy had shared, I think, we need to take the self-regulation to the next level and to operate it more like an ecosystem perspective, right? We are already seeing communities creating DAOs, having this self-governance and being able to vote for certain actions. And I think if we come together as an ecosystem to establish this a lot more wider, we can definitely bring a lot more trust to the ecosystem. And with that trust, I think more people will participate. And I think this way we can also proactively be able to share more with the regulators. So they're not seeing it as a company benefiting from this lobbying, but it's an entire industry, or it's an entire ecosystem that's actually going to be benefiting. And I hope that would actually help us all sleep better at night and, speculate and, reduce the amount of guesswork.
Thanks. So another trend we are seeing is this concept of interoperability between blockchain being so important in order to build a healthy, I would say, decentralized world. Benji, do you have something to say around that?
Sorry, one more time. My apologies.
The interoperability between blockchain being, an issue in order to build more services, and we have seen as well, the Poly network hack being, happening between different type of blockchain operating between each other. So, what are the issues and the risk going with that, and is it a real constraint for the ecosystem?
Sure. So generally, anything in blockchain involves a huge amount of risk. And hacking is not a very big risk. It does happen occasionally, but very rarely. But you get economic attacks, and that happens a lot more often. And what we see, for example, in our business, where we're taking NFTs and bridging them over to DeFi, DeFis have, can offer very high APYs, but also offer a lot amount of risk. So on a platform like Uniquely, you get 250% APRs, but it's definitely not risk-free APRs. So people should generally just be very aware of that. They can look for audits, but pretty much every protocol I know that has been subject to an economic attack has been audited. And auditors themselves don't really look for economic attacks. They look for more vulnerabilities in the code, not really in the logic of the architecture. So I think hacks happen and they'll continue happening, and this is really what we're going to find is that it's in a system which offers full transparency. We don't depend so much on regulations. I think financial crime exists pretty much everywhere, and banking needs regulations because you don't have transparency. And so people will get robbed blind without even knowing they were robbed. On the blockchain, you actually, you're robbed and you know exactly how you were robbed every step of the way. And I think that, for these reasons, just be very careful.
Thank you on the warnings. So last one trend that I think is major for, the blockchain industry is, the green and sustainable component of this technology. So, with a lot of reports saying, how, Bitcoin is so, not sustainable. But on the other side, other reports saying all the good things you can do for, building a greener and more sustainable with blockchain. Malik, I know you have been working a bit of this, especially, with all the universities you're working with. So can you share a bit on this, please?
Sure, and thank you for tabling this. I think it's a very important topic, and often we tend to miss it out. And keeping aside all the Elon Musk tweets and shenanigans, etc., I think everybody knows about the Bitcoin energy consumption. It's not a new thing. People of like us who've been in this space for a long time have known this since the beginning about proof of work and its challenges. But my view is, like any emerging technology, there will always be challenges and opportunities. So can we start looking at the opportunities rather than regurgitating the same thing that we've been saying for 5, 6, 7 years? A classic example for is ant forest. That's just one example of how you can gamify and perhaps if you embed the tokenization element into that, can you create carbon kind of offsetting tokens, for example, at scale. And when you have players like Ant, which has 1 billion users coming into something like this, working with the United Nations agencies, etc., there is definitely something you can do at scale. So my view is, and again, in the interest of time, I won't go into details. Tokenization, whether it is in terms of carbon credits, you have Power Ledger, etc., and other companies that I work with in Australia, which are trying to work on green energy. So you can work on the environment in terms of forest ecosystems, clean energy, even in terms of agriculture, tokenization of livestock. And there are many ways in which you can impact the environment. You can align with the SDG goals. And in my view, tokenization offers a very strong opportunity to take these initiatives to the next level, make them more transparent, make them more connected and at scale. So we have to stop looking at this endless debate, which really has no answer about Bitcoin energy consumption, and start looking at the opportunities and working towards them. Thank you.
Thank you, Malik, on this great note for the future of our planet. So we are at the end of this panel, and to close it, I will ask a quick answer from this question. If you had a magic wand, what will you do to ensure a healthier, better growth of the crypto markets? Let's start with Lucy, with the anti-clockwise.
For me, it's very clear what I wish for, and that's bank accounts that are easy to open, that stay open, that can support these new nascent crypto businesses. Because if we're going to drive adoption and have more people to move in, you cannot be worried about the fiat on and off ramp. So hands down, bank accounts for me.
Thank you, Lucy. Benji?
I don't know about you guys, but I like to travel. I kind of miss conferences.
So yeah, you're asking Bitcoin to help you traveling, or you're traveling the money? You can travel the world with Bitcoin,
Metaverse is not quite there yet, but maybe Metaverse will replace conferences.
Yes. Then Prakash?
Well, gas-free transactions, man. I think that will just open up a whole new level of interaction.
Thank you. And Malik?
I agree with all the previous speakers, but I am taking a customer-centric point of view, having come from banking for so long. So I will just say user experience, faster, cheaper, simpler.
Yeah, definitely. Let's forget that all behind that it's blockchain, right? So thank you so much, for this participation to this great panel. and have a good evening, morning, or lunch. Thank you.
Great.
Thank
Thanks.
you.
Thanks, everybody. Bye.
Thanks, Emma. Bye-bye.
Bye.